Libra, and Libra was the liquidity distribution engine that they would funnel all of the quote-unquote small trades through. And for them, small trades were everything under 2 million euros. And so they had this, they had Libra that would kind of take care of that. And so Libra was pretty cool because it was doing some stuff that really opened my eyes. Clever piece of software. So there'd be like a window of opportunity like this. And a bank would have a client, and the client was looking to buy and to sell at specific price points. So they'd define their criteria, then price would be coming down, then it would enter this box, and there'd be orders on the books that were to start filling orders at the upper edge of this box. And as soon as price got in there, well, then these massive orders were getting sliced up, and that's what this Libra, and it was getting them filled in small blocks of like 10, 20, 30, 40, 50, up to 100 lot orders. And it was really quick. And I remember watching it on the computer screen, and you would see these massive numbers come in, and it was so fascinating. I felt like I was in the Matrix, and it was very, very exciting for me. And this particular day, I felt that I uncovered something that was quite important, I think, to people who want to trade. And that was the distribution of liquidity. And so obviously this was on the sell side. And so the banks, they sell liquidity to us. So they're on the sell side, we buy it up as the retail traders. It really introduced me to something that kind of changed the way I view trading, where before maybe I'd be looking at maybe moving averages or other secondary representations of price that I didn't really understand. And instead of that, you were looking at a negative of a chart, because if you look at this chart here, you can see what's already happened. I mean, I can see the price went up here and then it's down here. But before price was up here, there was something else that was up here that caused price to go down here. And so you almost need like a negative of the chart that would look maybe something like this, where you would have kind of, for example, those blocks of orders would be located up here, you know, and Libra would kind of space them up in little levels like that. And I refer to these levels as pancakes, where each level, each pocket, each limit of that area is like a pancake. And so every time, if you want a pancake, you have to typically take the first pancake on the stack. And so you put your fork into the first stack, and then in that pancake would be gone. And so if I wanted another pancake, then I'd have to put my fork further into the stack. Once I remove the pancake, then it would be gone. Okay, and this really, really marries beautifully with the stuff that you guys all talk about, and that is this stop hunting. Because, I mean, yes, there are limit orders to sell up here. The banks know this, they can see this, but they can also see that their retail traders, they have their stops up there as well, or they are maybe breakout traders looking to be the first in on a potential move to the upside, and they can see where their stops are. And so, I mean, the clever thing to do would be to run price higher, to dump the liquidity into the market, which would enable the orders to get filled. And so, I mean, the banks, they're not out to get us. They're simply trying to fill the orders of their customers. And sometimes there isn't enough liquidity in the market, and so they have to find the liquidity. And so this constant pushing higher is dumping stops, is hitting stops, which is dumping liquidity into the market. It's also attracting people to buy, who are going to put their stops in, so you get these like the bull squeezes and all this kind of stuff. And so it makes perfect sense if you look at it that way. And so if you're focusing on like a secondary representation of price, like a moving average, it's not really telling you anything at all. It's telling you something that's pretty obvious if you just look at how price is moving. And so this way really appealed to me. And so essentially, I wanted to study this concept more. I mean, being a computer guy, I wanted to try and turn this into like a software challenge that I could embrace and get busy with while I was doing my day job. And then there was another guy that worked at the bank, and he was an economist. He was a really clever guy, and he would speak to me, and I would normally get about maybe 30% of the conversation. He was just a lot cleverer than I was, and he spoke a lot about like key figures, fundamental data, interest rates, PPI, CPI, and all these other things. And I didn't really understand all that stuff back then. So I asked him, I said, I mean, what's the difference? Why is one currency going up and one currency going down? And he said, well, essentially you have the health of two currencies that are competing. And so this guy, he said to me, essentially you have the health of two economies that are in battle. If price is moving higher, you have the base currency that is performing stronger or outperforming the cross currency. So I thought to myself, oh, that's really interesting. And I said, I mean, I'm not an economist. I didn't understand half of what this guy was saying. And so in my simple mind, I converted fundamental data to currency strength, if you're looking at currencies. And so, I mean, we're all familiar with like the dollar index, which is a remarkable tool, but what about a euro index and a CAD index and a yen index and an Aussie index and a franc index and a Singaporean dollar index and all of the others? I thought that would be a really good idea to me to see how two currencies are competing with one another without necessarily having to delve too much into the fundamental stuff that I didn't really understand at the time. And so I created software for the supply and demand, liquidity, and I created software for the currency strength. Okay, and so this for me was a really interesting way to understand what was going on. Okay, and so I mean, one of the things that before I say anything else, I just want to say a point came in my life where I really believed in my abilities as a trader. And my wife and I, we just bought a new home in central Copenhagen. It cost us an absolute fortune, and I said to my wife, all right, I'm going to do this. I'm going to quit my job and I'm going to become a full-time trader. And she said, we just bought a house and we have a mortgage to pay. You sure you can do this? And I said, oh yeah, it'll be a piece of cake. Famous last words. I quit my job. I forced myself to pay the mortgage trying to trade. And we almost lost our home. We almost went bankrupt, but we had a very lovely bank lady who managed to help us change the mortgage of our home so that we could stay in it. So we didn't lose our home. Okay, so that was kind of the downside. The upside was that I was blessed to spend 10 months of my life staring at price charts for 10 hours a day. And during that 10-month period, I started to notice some really, really interesting things, these patterns that were emerging over and over and over and over again. So I just want to share some of that stuff with you guys today. It's pretty similar to the stuff I think that you all talk about at the Underground Traders Alliance, and Mark is talking about this stuff all the time in his videos, and it's phenomenal. And so we're just going to go over, I mean, a couple of examples, and I hope that this helps. I hope it's simple. I mean, it's a very simple concept. It's difficult to implement because of obviously the emotional bit, but the concepts are pretty simple. Okay, so if we look at like a chart like this one here, okay, you can see that we have a high, we have a low, we have a high, and we have a low. I mean, the fact that price went down from this point to this point, that tells us something about this price level here. Okay, that tells us that this price level was such an attractive price that we had an enormous influx of people moving funds in the Canadian dollar, and they were liquidating their British pound positions because price, I mean, this is a weekly chart, I mean, that's enormous selling pressure there. And so you think, well, why on earth did it stop there? Why didn't it stop here? Or why didn't it stop here? Or why didn't it continue going out of the bottom here? And this is where a key attention to detail comes in. We have to pay really close attention to very, very subtle details. So if we look at this, I mean, price came down here, and it came down and it moved up here. And notice, I mean, again, you could ask, well, why did it stop there? Why did it stop there? And if you look at this, little price structure here, so if you look at this, I mean, price came down and it turned around. Well, why did it do that? Well, if you look here, I mean, price came down, and when price was down here, we managed to move all the way up here. And that tells us again that we have a really keen interest on driving price higher. And the fact that price was able to move from here and move above this high and this high tells us something about the strength of something in here. We can't really see what it is, but what we can see is we can see some little tiny baby clues as to what's going on. And notice here we have these two candles, okay? And this candle here, this is an accumulation candle. And this is an accumulation candle because it didn't really go anywhere. I mean, the size of the body is small relative to the size of the range of the entire candle. Okay, so price popped up. And the fact that price on the weekly chart is able to close above the highs of these two accumulation candles, again, tells us something about strength. And then the following candle, I mean, we did not move sideways. We cut up straight away. Okay, And so you're thinking, okay, this is interesting. I mean, why is it doing this? And the reason it's doing this is we had nothing but buying. This is enormous strength, price going up like this. And notice that price comes back down here. But also notice that this is at the lows of this candle right here, probably to the pip. And this is on the weekly chart, maybe plus maybe a couple of pips, a handful of pips. But it's not by chance that it happened. And this little price structure here, I mean, price rallies, we move sideways, we start painting accumulation candles, and then we have a little pattern where prices pull back, like the slingshot is pulled back, and then it's released. And what happens when you release a slingshot? It really takes off. Let me see if I can draw something. So we have price going up, it's moving sideways, we pull that slingshot back, and then it flies up. And so this here is what I'll refer to as micro demand. And this is micro demand because it's not, the details of it are not visible on the chart that I'm currently looking at. And so I call it micro because it's probably maybe on the daily or the 4-hour chart that we can see it. But yeah, price reacted here, but it had to react there. It had to return to the base of this move in order to advertise these really cheap prices to begin to onboard people that were looking to continue to buy. Eraser. Okay. Okay, so if we okay, so if we have a look at this little bit here, we'll just mark it off like that. So, come on. Right, we'll go like that, and we'll go to smaller time frame and have a look. Here it is. As you notice here that we had price came down, it formed this base, then it rallied, accumulator rallied, and we went up, and we kind of sat on this price point, and we started to paint these accumulation candles. You can see here accumulation just means, as I mentioned, we have the bodies of the candles are small relative to the range of the entire candle. And so when this is happening, this is orders being filled. Come on, pen. So this is this bloody drawing tool's driving me up there. How do you turn it off? Clear. Go away. Right, I'll just do it with my mouse. Right, so so price goes up and it moves sideways. And when price is moving sideways like this, it means that the banks are filling the orders on their books. And so they get to work in the morning, they look at the books, they see, well, yes, we have some orders that need filling. And so this accumulation is going on just here, and we can see. So price pops up, and we left from this area here. We moved above these highs, which is telling us something about strength. And so this is the natural place for price to want to gravitate to and react at in the future. Okay, we have, and this is happening all the time, all over the place. I'm just gonna, let me have a look here. Oh man, let me get these, clear all this stuff here. Okay. Okay, good. Okay, so if we have a look here on the weekly chart, you'll see here that price popped down here and it came up, and then we have this one here where price came up to here. Here we have another example of a sell zone where price came back to something in here. You see price came back and prices were driven higher, and we had enormous rejection. The fact that price again managed to close below this and below this is telling us something about this price level. And so when you see price move to an area and then depart quickly, I mean, this becomes a watch for me, at least on the weekly or the daily. This becomes an area that I want to watch in the future. And the interesting thing about this is typically, and I call this the buy zone or the sell zone. And so we have the move down, and I'll mark off the deepest retracement since it left. Okay, price came down, we went up, and we left. And so price, in order to onboard sellers, we're going to have to move to a price point at least as much as the highs of this. And then price pokes through and it goes back. It goes a little bit deeper. This is a little bit deeper than that one. And then we leave, and then price, obviously we've sold enough here, and then the supply and demand metric is out of balance, and then we start to decline. What happens again? Price goes a little bit deeper. It goes a little bit deeper, and then it comes down. And so if you look at this little piece here, if we mark this off, let's just do it like that. this is the whole pancake thing going on, where we have the first pancake is at the edge of the area of supply, and then it was removed by this test. What happens the next time? We go a little bit deeper to get the next pancake. After this test, well, then the pancake's gone. And so we have to go a little bit deeper to get the next one, and a little bit deeper to get the next one. And so this constant push, deeper and deeper and deeper, is price seeking liquidity to, in this case, attract sellers. And this is where you're going to see stop hunts going on all day long. Okay, this is exactly what's happening at these price points. And so, I mean, what I like to do in a situation like this is, I mean, in relation to supply and demand, you have to gauge the strength of an area of supply or an area of demand, because it's difficult, because the Forex market is so decentralized. It's quite difficult to get any accurate information. And so we really need to pay attention to what price is capable of accomplishing without necessarily looking at volume, because volume could be inaccurate. And you can do this by focusing on stuff like pushes beyond historically respected levels. Okay, we had this move low, we had this move high, and we had this move low. The fact that price again was able to move all the way down here from here tells me at the origin of this move we have serious sellers. Price goes back to the origin, almost to the pip, and then it leaves. Okay, and you'll see this over and over again. Okay, and if we have a look, I mean a really quick way that I like to validate these areas is I just mark something on that's done damage. Sorry, my tool is not enabled. Okay, like that. And then I'll look for which area of opposing supply or demand that was able to remove it. And this will bring my attention to the source or the origin of the move that was strong enough to consume the opposing pools of liquidity. Because then you know, I mean, if you look at, if you look at an order book, you have this price, this much volume, this price, this much volume. And so because it's kind of a difficult game in the retail FX space due to all the decentralized volume readings, you have to be you can only look at stuff like this. And the way you can qualify the strength of an area of supply or demand is by looking, rather asking yourself the question, was it able to accomplish anything? And by accomplishing something, I mean consume opposing supply or demand. And you can see price came here, we came up here, and we moved below this area here. So that tells us something about this area here. And so I'll remove the box here and I'll move it up here like that, because here we have a slingshot. This area is great. We moved below this one. Price went down, the slingshot's pulled back, and then it dumps down. Where does price go to again? We go back to it here. First pancake's been taken, next pancake, and then we leave. And this one, this is a hungry seller. And so it has to go very deep. And so we actually have to go beyond this plate of pancakes, and we actually have to move into the other plate of pancakes, which is up here. Okay, I hope my pancake metaphor isn't annoying or confusing. So yeah, and so I mean, this one was able to remove, this one down here. So we know we have strength in this here. Okay, price tested, and now it's gone. But notice that when price left here, the origin of the move that moved through the supply is down here, but price did not manage to trade above it. So that says that there's no demand in here. Okay, so that means you have to look lower. Okay, and in a situation like that, it really helps to know what side of the market you should be buying on and what side of the market you should be selling on. And I'll try and do an example of that. What I like to do is I like to mark off an extreme high and an extreme low. And then I want to put a box around these two here. Okay, so what I'll do is I'll mark from the low to the high of the move up. So I go like that, and I move it all the way up here. I'm going to change this color to green, like that. Then I have this one here, which goes like that. Okay, and this is important because this enables me to sit in my hands until price is reacting on real demand and not reactions to it. Okay, and so the real demand is in here. This is where the demand is on the move from the origin to the high. There's no demand in here. Okay, and so while this might look like a really nice area to buy, there's no demand in here because this is just price reacting at demand over here. And so this way, doing it this way, forces you to focus on the buy zone, okay, which is the green side. And so this is, I just call it like B for buys, and this is S for sell. So this is the sell side, and this is the buy side. And then what I'll do is every time price comes up and has a pullback, I'll adjust my buy zone and sell zone. Okay, and so first of all, I'll have this one here, and after it's been tested, then I don't expect it to hold again for the next time. And so price will move through it, and then it'll leave, and so then I mark off this, and so this is my new area. Okay, and so now this is the most expensive price that I can pay for the pound Canadian dollar, and I have to wait for it to come back here. Okay, price came back to it and it raced through it. It cut through the, I mean, almost instantly. Okay, and we had first test here, we had the second and third and fourth test just here. And when you have this many tests, what's happening to the plate of pancakes? It's getting smaller and smaller and smaller. And so eventually there are no pancakes to be taken. Then you'll have to look at the origin, closer to the origin of the move, up like that. And so again, only buying at demand on this side and only selling at supply on this side. Okay, we have beautiful supply here. Okay, price tested it a couple of times and we went down. We had new supply being formed just up here. This area here, and this is supply because when price left this area here, we managed to move below all of these lows and take out this demand just here. Okay, which is really important. Again, we need to, in some way, qualify the strength of a given area of supply or demand. Okay, so we have this one here, and notice that we have sideways price movement, and we have a pin bar right there. That little slingshot was pulled back, and then it went down. So there's probably something in here that is worth having a closer look at on the smaller time frame. Okay, so price goes there, we go a little bit deeper, so we go through this one and we go back to this one here, which is where the original area is, and this is where we attract sellers. Okay, and so when you can see an area like this and it's been tested once and twice and 3 times and 4 times, these tests, any supply that is formed as a result of price testing another area, an area higher to it if it's supply, is considered, or I refer to as a child. So this becomes the child, and this up here is the parent. So this is a child. Sorry, there's no supply there. This is a child. Okay, there's no supply here. There's supply here. There's supply here because we did this. And so whenever you have like children and parents, another metaphor I like to use, just to help highlight the fact that there is a relationship between different types of supply and demand, where you have apparent supply and demand is the real stuff. Then you have children, and children are reactions to parent supply and demand. Okay, and so when you see this happening, this is telling you to be careful trading children, not to be misunderstood. Okay, so you have to be very careful trading children. I mean, price will often react there, and it did here, but if you're looking for more of a set and forget a trade approach, then you only want to be looking at parents and trading fresh parent supply and demand. And these will work intraday quite nicely, but if you're looking for, the moves like this, then you always want to be looking at where price has not been. Okay, and you can see this pretty clearly by, and you have your area here, price went down, the fact that we moved away from this area here. So we have something in here, we have some supply up in here. And from the point that this place was established, there's black space. When you see black space like that, it means that it's fresh. I mean, price has not been there yet. That means what? That means that we have a brand new toasty plate of pancakes fresh out of the oven. And so this is where you want to start to to sell from. Okay. Okay, cool. Let me do another example. Is there anything here I should go over again? If there's something that's like really unclear and you want me to elaborate on, just have a quick shout out and let me know, and I can reiterate before I move on.